Hi, it's Jerimiah Taylor with Keller Realty, coming to you today with our year-end 2020 wrap-up. And wow, what a year it was. When we start to think about 2020 in real estate, I think it's easy to use words like unprecedented, first of its kind, we'll never see things like this again. Um, but it's a little bit more work, and I think it's a little bit more interesting to click through that and really look at the numbers that drove real estate for the year and what the outcome was and how that kind of relates to what we're seeing and predicting for 2021. So across the three markets that we work in, Tucson, San Diego, and Austin, let's take a look at how the year wrapped up and what the trends were. So number one, prices up in a big way across all these markets. This is the first time we've seen prices over 300,000 by this much in Tucson. For context, at the previous peak, these prices were in the high 200s. So even for those people that thought they were buying past the peak in 2005 and 6, if they just held their property through 2021, they are many, many dollars ahead. San Diego, same thing. Austin, same thing. In fact, in San Diego, the average single family home, because keep in mind, these numbers are blended averages of residential single family and condo townhome. So in San Diego, the average single family home is nearly $1 million for the average single family home. So these markets are crazy. They're on fire. Year over year inventory across all three markets is down by almost half, or in some cases, far more than half. What that means is that buyers just have fewer choices than they had a year ago. Now, what's interesting is some of that comes from lower listing inventory in terms of new listings coming to markets. Like in Austin and Tucson, listing inventory was actually pretty flat. In San Diego, it was down about 17%. But look at what happened to demand in Austin and Tucson. So the inventory change in Austin and Tucson was really driven by demand, whereas in San Diego, it was driven by supply. And what you're seeing here are two markets or three markets that Austin and Tucson were impacted very differently by COVID lockdown restrictions than California. And the way that the California lockdowns were run was became much more of a hindrance to people buying and selling houses and began to really drive some of these inventory numbers. I think had you seen like Austin and Tucson style lockdowns in California, this number would be a lot bigger and this number would be a lot bigger in terms of pendings. But when we pull that all the way to the bottom of closings, San Diego had about 10% fewer homes close. Austin and Tucson as a total had 3 and 9% more homes closed respectively. But the interesting thing is across all markets, the best homes are always selling fast, but in this market, they're selling even faster. And I think the things to point out here are as a percentage of new listings coming to market, what's selling is really interesting is look at Austin. 40,000 homes sold of 43,816 listings, whereas in San Diego, you had roughly the same amount of sales, but you had far more listings. You had actually 56,000 listings. And so when you look at that number in Austin, basically 92% of the homes that came on the market in Austin sold, whereas in San Diego, only 77% of the homes that came on the market sold. And then, of course, you've got Tucson, where you had 16,614 of a possible 19,012 homes. So roughly 87% of those sold. So again, like you can see here, demand in Austin, where 92% of the homes coming to market last year sold from a list to sell ratio. That number was a lot softer in San Diego and actually pretty strong in Tucson as well. And that just tells you about buyer demand in these markets. Like San Diego, it should actually be a little bit easier for a buyer to find a home than it is in some of these other markets because there's just less demand. And we're all hearing the news headlines that, the people are leaving California and heading to Texas. And I don't know that at some level these numbers don't support that. But I want to come back to price because what a lot of people are saying is, these prices are unsustainable. We're in a bubble. Why would I buy at this price? And I want to help you understand why this is still such a great time to buy. Now, everybody makes the interest rate argument. The interest rate argument is rates today are at 2.75%. A year ago, they were at 3.75, 4.25. And so even though we added, 10 to 20% in price because we took a point to a point and a half off of rate, like net, your cost of ownership through financing is actually about the same, or, it's slightly more expensive, but it really didn't even pace inflation. I think that's an interesting argument. But the one that I really want to make is that we actually still have room to grow from a general home price appreciation standpoint from the beginning of time. So, what I mean here is if you look at historical home price appreciation from the beginning of time to now, it's roughly 4.8%. This yellow line represents that 4.8% over time. Now you'll see in 03, 04, 05, 06, 07, 08, like we massively started to outrun that, and then we had a correction, right? We had the housing dearth of 2008, 9, and 10, and had you bought here and sold here, you would have been in really bad shape. However, had you just held it out to maybe 15 or 16, you were generally back to whole, and then if you held it a few more years, you were plenty of dollars ahead. And what's interesting to see here is there's still some real headroom at the end of 2019, and we don't have the 2020 numbers yet. When they come out, you better believe we're going to do an analysis on them. But in 2019, we still had some headroom to get back to this kind of long-term trend line. And so it's reasonable to believe that even though, yes, house prices went up significantly last year, I'm going to be watching really closely to see where we're landing against this trend line. Because when you combine the long-term price of housing with the extremely low cost of financing today, if we haven't broken out of this trend line, it's pretty reasonable to believe that we're in a place where this continues, that we see another 5 or 6% or more this next year. And as we enter the year with these low inventory numbers at the end of the year, price really only has one way to go so long as demand stays the same. So super interesting year in real estate. Never seen anything like this. 2021, I will tell you, is starting off with an absolute bang. We're coming into mid-February. Texas is basically frozen at this point. Tucson and San Diego are starting to emerge from winter, and the buyers are coming out of the woodwork. We're seeing multiple offers way, way, way over list price, with buyers making up the difference in cash, paying over appraised value. And really, the best product today is the fully remodeled, fully renovated, turnkey home. That's what buyers are looking for, and boy, oh boy, are they willing to pay for it. So, if you're an investor, great time to be in real estate. If you're thinking about selling, this is a great time to think about the smart fix-ups of how you can make that home look its best so that you can maximize and get top dollar in this market. So, excited to share this 2020 wrap up with you all. More data to come on home price. As always, thanks so much. Give us a call or visit our website, nobodydoesmore.com, if you have questions about real estate in any of the markets we serve. Signing off, it's Jerimiah Taylor.